So let's actually start today with Doug Flynn from Flynn Zito Capital Management, who joins the program a little earlier than he usually does. So, all right, we're down 1 hour to go. You know, in these situations, with the way the trading days are set up, you get all the action at the beginning of the day and at the end of the day, where it all works electronically. So what type of a message do we get today? Do we kind of rally off the lows again, or do we sell into the close? How does it feel to you?
Yeah, it feels like, well, what happened was after gapping down and opening much farther down, it kind of leveled. It's been pretty flat the rest of the day. So it is interesting to see which way it's going to go. We're going to retest some of those lows. We're going to just hang in there. We're going to go back up a little bit. But we did get a recovery at the early in the day today, which is somewhat encouraging. But, this is on the backdrop of the negative unemployment data and just the overall deterioration of the economy, even though we kept talking about it, but nobody was really feeling it yet because the market kept doing well. But this is the sign. You're like 9% off the all-time high on the S&P, and 10% is the correction number you're looking for. The NASDAQ is already in correction territory, so we're looking to see if the broad market gets in there as well. Corrections happen. You worry about more than that in bear markets, which would be down 20% off a high, so 10%. That's right. Okay, we can live with it. We can move on. We mentioned the Dow down, or we saw it down 1,000 points. That's a big number, but it's not as big percentage-wise as it was years ago. I want to go on the tablet to the NASDAQ because that's where the action has been here, the tech stocks. And when I show the NASDAQ, I show this chart on purpose. It's a 30-year chart of the NASDAQ for some perspective, because on days like this, you need it. So when the NASDAQ crashed, remember way back when? Just a little blip now, right? When '08 happened, just a little blip now. The run-ups, because that's what the stock market does in this country over time, it goes up, are much bigger than the sell-offs, including this recent one before this most recent sell-off, which has been led by what? The stocks that were up. Some people call them the Magnificent Seven: NVIDIA, Apple, Microsoft, Amazon, Tesla, Alphabet, Meta. Not so magnificent lately. What's going on with them? It's the same story that if you have a very long-term time horizon, then if you buy good companies that do well, have good earnings, and they expand and they grow, then the stock market, their stock itself, is going to carry along. You're going to have these pockets when things get too overpriced. They're going to adjust. And the problem that people have is they tend to chase things. They tend to buy things when they hit the all-time high, and they're very afraid of things going on sale. Well, I always say if you liked NVIDIA when it was 120, you should like it even more when it's below 100. Those are the opportunities that you're looking for. And if you have 10 or more years to go with some of that money, you do want to be buying them when they're not always at their all-time high. You want to look for these opportunities. And when things are overpriced or run up a lot, look for other opportunities, because as you're seeing today, some of the other things aren't going down as much as those high flyers went up. What goes up goes down in direct proportion. Stocks go up, stocks go down. Doug, we'll check in with you again. Thanks for hopping on early, right before the closing bell. Doug Flynn, thank you for that. Let's bring Doug Flynn back on this. He was with us at the top of the broadcast. Let's see how this wraps up. So that's what we were talking about, whether we would sell into the close. I suppose a little bit, right, on the NASDAQ, but not as bad as we were when we opened down 6% of the NASDAQ. Yeah, it seemed like it opened down. We call it gapping down, and then just kind of went sideways for the rest of the day and limped into the final hour. So nothing really breaking one way or the other at the end. But there is global concern about a recession in the U.S. That's sort of propped back up, and that's what's causing these fears. And then the Fed not lowering rates, and everybody feels now that they should have. So now they either have to intervene and do an extra special rate drop, or we have to wait till September because that's the next meeting. Yeah, we had a guy on, it was a political guy on early in the hour who's running for Senate out in Michigan who said just that. So, they got to cut, that would be. Do you expect that? Is that something realistic that they jump in before September, or is just a lot of chatter right now? They have done that, but it's not common, and I wouldn't expect it. I mean, I think that it would have to be really dire for them to come in and do it after. I mean, literally a week ago they said, we're not going to do it. So, there is a couple of weeks here before it rolls around to September. It's mid-September. So, I mean, it's possible, but I put a really low probability. I think they're going to wait. Now, maybe they'll do a larger than just 1 quarter drop in September. That's likely. That has increased the probability. Maybe they do a half a percent or even more, depending. So that's, I think, how they'll solve it. Did they wait too long? And the question at the bottom of the screen here in the final minute, is that the issue right now? Is that what's going on? The market's basically telling the Fed, hey, you should have done this earlier. You're behind. Yes, I mean, what happened was they ended up with a tighter monetary policy, choking the economy, if you will, by the nature of how quickly inflation came down and the economy did turn down faster than probably anybody expected. It was good for a while and better than people expected, and then it really started to turn. And I think that's really the issue. They probably should have done it, but they can make up for it if they get onto it next month.
Hang out with us, Doug, would you?